So let's take a few more looks at re-entry opportunities and how to time our re-entries by using different concepts such as trendline shifts, retests, and high momentum candles, or as we called them previously, momentum shifts. So you can see we are here in a very classic swing reversal. We have a very nice uptrend here above the moving average. We are putting in this top here. This is also called a trap here at the top. Let's zoom in a bit, and you can see that we did not immediately break the moving average, but as you know, we don't have to wait on the moving average when we see such a squeeze or such a trap pattern. So your initial entry could have been here. Let me mark that for you. The second candle, once we have another follow through, could have been here at the lower price once we see an even greater reaction. But if you want to find re-entry opportunities at a better price, you don't want to see an entry, or you don't want to take an entry when price has pulled away so far from this top, then you just wait a little bit longer. And you can see that in this case we have our flip zone. You can see we are coming back into this area. It has been resistance, support, and support. It's also the place of the moving average by then. So we are seeing a retest here. Of course, not always do we get the retest, and if you decide to wait, then you might miss a few trades. On the other hand, you will get into trades with a better reward to risk ratio because you can sell for a higher price. And one more important thing is that the retest is only a confirmed retest once price is pulling away again from the moving average. So you can see here we have two green bars moving back into the moving average. That is not a retest here once the second green candle closes. It is only a confirmed retest once we are pulling away from the support or resistance area in that case. And here we have another retest pattern again. We are moving back into the area. This time we even have a larger momentum shift. You can see that we are moving back here into the area. We are finding resistance again. We are moving down here sharply. And then we have a momentum shift, a momentum candle, which is indicating that there is enough, or there is a lot of selling pressure now behind the move. We are coming from this high with a squeeze. And so that is how you can time your re-entry opportunities or your re-entry trades. And that is very important that you don't take a trade blindly off the resistance area. You always wait that price is pulling away again, which will give us confirmation that the level is valid, because very often you will see prices moving into the level, it is finding resistance, but then the next candle is just going against us. And by waiting a little bit longer, you can get a higher win rate here on such trades. At the same time, you will reduce your reward to risk ratio because you get in at a later stage. So that is a trade-off that you have to make and have to decide if it's worth for you. And you can also test that hypothesis in your trading journal to see if it's really a good thing. Can you enter here at the highs, or do you need to wait on retest? But we recommend that you should wait for a confirmed retest because it can improve the quality of your trades. A few more and different examples. You can see we are here in an uptrend. We are putting in here the double top, our local structure at the highs here. You can see that price is not being able to push higher, and we see a sudden move lower. We don't initially break the moving average. You can also see we have a local structure here at the bottom, a local support and resistance area. And in that case, we would have missed the trade because suddenly we see a huge drop, which is taking us very far away from the moving average. If you decide to take the trade, if you think there is still a good enough profit potential, then by all means you can do that. But if you wait for the retest, in that case, it would not have happened. You would have missed the trade, and that is a very important lesson here. Not always do we get the retest, sometimes we just miss the trade, and that is a very important thing that you have to internalize. You cannot catch all the reversal trades over the long term. You will get plenty of signals, so don't try to chase price, and sometimes you just don't get a retest. Then here we are moving straight into a new downtrend from this reversal. We are seeing here multiple patterns. We are seeing multiple trend waves. We are moving back into the previous support here. We have a double bottom. We see a break to the upside. And as we said previously, there are multiple ways to enter the trade. Here is one. Then you can wait here as well on the second one to see that price is pulling away. But you can see that here a re-entry opportunity exists. Once we make our first swing and our first trend wave in the new trend, you can see that we have 3 bullish bars in the direction of the trend. Then we get 2 very small candles, but they go against the trend. So this is what we could call our first trend leg, and then we just wait it out to see when does price reverse. In that case, the pullback was only 2 candles. We break above the highs, and here is then your entry or re-entry opportunity. And that is a very important market pattern and a very important way of re-entering the price, because it will happen quite often. So in that case, you see we don't get an immediate pullback into the moving average. You can see we are retesting the highs here if we marked it correctly, but then we just wait until this first trend wave has been completed, until the pullback is done, and then we enter with the momentum in the direction of the trade. We never enter once price is going down, we only enter long once price is pulling away again. We are breaking the highs, we are making higher highs, so that is how you could get into such a trade again. Another classic example here, our trend line shift. Again, you can see we have been in a very nice uptrend here. We are putting in the triple top with the squeeze pattern with the trap here at the top, and then the trend continues, or it starts to the downside. Very nice short trade or in short trend. And the question is, how do you enter the trade if you miss it for some reason? And you can see that we have some type of support and resistance area here, depending on how we want to draw that. Probably we need a zone here at that area. So you can see we have a few reaction points here, some wicks hanging around, and then price comes back into the area. We don't get a full retest, we come a little bit short, but you can see then price is pulling away. We are putting in here this new lower high. You can see that the new trend structure is now being confirmed. We went from making higher highs to making lower highs, and then we just wait until we break the lows. And in that case, here are the lows, the previous lows, you can see that. And then with that candle, you can see, although we are entering late here in this overall trend, you can see that here the previous uptrend lasted for quite some time. And if you believe that there is enough profit potential, if you are aiming at the lows here or even at the previous swing high, then you could get into such a trade here at a later point with probably a reasonable stop loss area somewhere around the highs here. If you remember correctly, we're always going with the stop loss above the previous swing high. So in that case, the stop loss would go somewhere around here. You can see that afterwards the trend continued. You could even add to such a trade. You can see price keeps making lower lows and lower highs. So you could use those points, as I said in the previous video, as additional entry points to scale into a trade. But the major part of your position should be in early at the highest price, and then later on you scale into the trade if you want to do that. If not, that is totally fine. You can trade the reversal strategy just with one entry and one initial position. That is totally fine. And some more classic retests. In the previous video we more looked at the trend line retests and how to get in there, and this time we are looking more at the reversal and the swing reversal. And here we have a lot of flip zones that we can use. You can see we are coming from an uptrend. We are putting in the reversal here. The initial entry could have been somewhere around here. The break of the moving average was not as clear, so if you waited, you could have gotten in here. But you can see we have some type of flip zone. Remember, we are putting in here a support area. We're coming back into it, and we're retesting it as resistance. Again, when is the retest confirmed? The retest is only confirmed once we pull away again from the area. So in that case, it would be here. Or if you want to wait a little bit longer, you can see by that point we are also breaking a swing low, the previous swing low. We are confirming the new trend structure that we are making lower highs and lower lows at this point. And so there is another way of playing this. Depends on your strategy or depends on your style, what you feel comfortable with. And you can see that the natural flip zone behavior, lower lows, lower highs, the previous swing points, they get retested on the way down. And that is how many trends behave and evolve. But then we can just scroll forward and you can see that here we have a similar pattern. You can see we're going from lower lows and lower highs to higher lows here. Suddenly we are breaking above the moving average here the first time that we broke it, and this time we see a valid retest of the 20 SMA. Here is our flip zone somewhere in this area. You can see that support becomes resistance. Here we come a little bit short of it. Not a big deal. We are seeing a confirmed retest of the moving average in that case. Here is the first candle where we are pulling away after the retest. Here is the second one where we are also now barely breaking above the previous closes. You can see that here price closed previously, now we are breaking above it. So interesting pattern, and again you can see that the pattern repeats itself over and over again. We break higher, we come back into the previous swing high, we retested it as support, and then off we go. So again, this is very important that you pay attention to this natural rhythm. You know about the swing highs, the swing lows, how price usually retests such areas on the way up, on the way down. You can use different techniques such as the moving average retest if it holds, the swing high and swing low retest, and always make sure that you're entering with momentum. Make sure that you enter once the levels have been broken. Don't enter ahead of the levels because it is not a high probability trade. And so that is a way of getting into trades with different points at different stages with different criteria and signals. And so the 3 patterns that we have taught you, there are actually much more than 3 patterns, but they allow you to analyze many trend structures, many different trend structures, and allow you to get into different types of trades and help you also understand general market dynamics and trends in general. And that's it for this video and for the way how to re-enter trades. And if you have any questions, as always, just come over